The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Markets are quiet after a bit of a rumbling morning there. We definitely had some movement over in the currencies. And based on the reports that came out, last night and this morning, one of three major reports that people are going to be really paying attention to try to interpret and guesstimate what's going to come out this Friday in the non-farm payroll report. So, but we'll be checking that out. We'll go up and we'll do a little news analysis and see what we think we can, glimmer out that and see where we think the market's going to head. Right now, we have the S&P just down a couple ticks. We have the Russell down 5. Nasdaq's down 16 with the Dow up 67. Oil is currently up $1.41 with natural gas up about 0.25% right now. We got corn down 7 points, a little over 1% move on corn right there. Ags have been great to trade lately. Soybeans currently down, or actually up 21 points. That's over almost 1.5%. We got euro dollar is up 86 pips. Aussie dollar is up 197 pips. A massive movement on the Aussie dollar. So we'll go through and we'll look at that in our next segment. We got pound dollar. It's up 127 pips on the day right now. Dollar CAD is down 79 pips. Dollar franc down 109 pips. Euro yen down at 68. Pound yen down 41. U.S. yen down $1.19. So the yen is definitely gaining a lot of strength, showing a lot of dollar weakness, a lot of yen strength. I was looking to that coming into the week, expecting that trend to continue just based on the fundamental reports. Of course, how everything comes out this week will definitely be a big indicator. Right now, their QE is very, obviously, always, but it's very dependent upon what's going to happen with the economy. So as the economy improves, then that means back off of QE. That means stronger dollar, okay? And we all know that. That's always been the case. But what changed here, of course, in the last week or so, whenever they actually said the announcement, note to the Fed minutes, Bernanke talked, all that stuff, they actually talked about we are looking at lowering, potentially starting to scale back, some of the QE, the bond buying, things like that, as early as this month. And I'm sure part of that is just test it out and see what the markets do. But if the markets basically just, they dropped, went back up, and now they're just flat, and they're waiting. And, of course, it's going to be interesting because if we get bad data, which should be really bad for the market, well, that means more QE. So it could be good for this. So the bad data could be good because it means, oh, good, it won't end in June. They're going to extend it at least to January, or at least we have another month if the data is bad. If we get good data, that's good, and you'll get that initial pop, but then you'll get the, oh, wait a minute, they may be getting rid of QE. It could be bad. So, just a an weird era in the market when good is bad and bad is good because of interference by the Fed. And so not just our Fed. We got, Japan, Europe, Britain, all of them doing all their little pony show tricks and everything else. And so it's definitely interesting markets to trade, very scalping, trader's dream markets. Go in there, take your trades, take your profits, get out, move on to the next trade. No reason to hang out and just, let it, keep coming against you. And, there's a lot of trades that we can look at this week. And let me pull up a couple things over here. We'll figure out exactly which ones we're going to focus on. But, let's go ahead and do a quick wrap on the announcements that came out. And last night we had the retail sales come out of Australia. They came in at a 0.2 on a 0.3 expectation. Not really in and of itself a big market mover. Was worse than expected. And but it was still much better than the previous report, which came in at a negative 0.4%. So, again, a little fundamental shock there, but it was small. I didn't expect a big one on that one. And then the job advertisements, they were, worse than expected and worse than the last time. And they also revised down the previous report. Australia has this. Basically, it's, how do I put this? It's literally job, like think of Monster.com. How many jobs were advertised in the newspapers and websites in the major capital cities? So they actually collect this data to see how many jobs are being sought out and, published in newspapers and websites. So that's you couldn't manipulate that data at all, could you? But anyway, so that number comes out, and it's tracked by a media center, ANZ, media.anz.com. And so that report came out at the same time. And then we had a company operating profits quarter over quarter, and that's the profits earned by corporations over the quarter. That was a positive number for Australia. Medium high impact reports, but not major impacts in and of themselves. Even though, of course, we did get, obviously, we've had some, huge movement in the Aussie. Most of that was not simply a direct result of those fundamental announcements, because most of them would have taken it, down versus, up. It's more of a result of the weak dollar. And, we, got that big move, obviously, this morning off of the report that we had. And that was the big news. That's the one that really, basically weakened the dollar against the Aussie. But and really against most currency pairs out there, and so we saw some really good moves. But Australia, literally, the Aussie dollar just shot to the moon off of it. It went from 96.25, and in a relatively short period of time, just over a couple of hours, it's up at 97.80. So we got almost all that movement in just a very limited amount of time, and it was edging higher overnight. And I was looking at dollar yen this morning as well, and I was like, hey, dollar's looking weak, yen's looking strong, looking for the dollar yen to move down. Same thing on euro yen. And it was just really interesting. So the strength in the yen and the weakness in the dollar as all these things are happening, and half of it almost doesn't make sense, but it does make sense to trade. It doesn't make sense to invest with the way these things are going. We got a Spanish manufacturing PMI. That number came out last night at 3:15 a.m. And PMI, what is PMI? So it's a purchasing manager index. They go in and they survey a certain number of managers, depending upon which PMI report it is. You can get all the PMI reports over on markit.com, markit.com, or Market Economics, that's what it is, markit economics.com. And you can get them for Mexico, for Greece, for China, for all the reports they do. And they do them all over the world. So it's a really good resource if you're tracking PMI reports, and that's where they usually are released from. So right there, but they came in at 48.1 over 45.1, and what they do is they survey them, and they basically say, how are things looking for, hiring new people, for, your new orders that are coming in, for how productive you're, how much are you using, your production facilities, and what about prices and, deliveries and inventories, and, is your inventory turning over, all that stuff. So they'll go through and they'll ask them this whole list of questions. And that's basically what the PMI reports are. So that one came out. Then the Italian PMI report came out. That one came in stronger than expected as well. Okay, came in at 47.3 or 46.2. And then we actually had the pound PMI report come out. Came in at 51.3 on 50.3. So you had, Spain, Italy, and Britain, all three of them having positive PMI reports all in the same evening. So that's going to give strength, obviously, to those pairs, which is going to weaken the dollar. So in all three, because people are going to, it's basically fundamentally that's a buy, which means if you're buying one, you're selling the other. I can't buy pounds without giving you something. So whether I'm giving you yen or I'm giving you dollars or I'm giving you whatever. So across the board, people are pretty much, giving their dollars and buying, these other currency pairs. So being obviously, so that helped the pound dollar when you had Europe had the same thing happen. I know technically Britain is not in the EU, but, whatever. They don't take the, they have the Britain currency and everything else. But, and they operate independently with their own bank. And either way, the European economy obviously is completely tied into Britain and does have a massive impact on their market. And, we've seen that just as the markets have moved. But the big report, even though we saw those PMI reports, we can go back and, you can pull up your charts, you can check them all out. We'll pull them up here probably in the next segment. but we'll go through and look at some of these reports. And we saw those reports come out. Let's see, the British PMI report, that came out at, 4:30. And so when that one was released, you actually saw, sort of interesting, you actually saw a little bit of a drop. It's like they were getting ready for they knew what was coming. And what was that? What was coming? Well, that was the ISM manufacturing PMI. And usually I'm looking for basically a difference of about 0.2 or 2.0 on the ISM manufacturing PMI. And we got pretty close to that. So we got 49 on an expectation of 50.6, so there's a difference of 1.6. And that combined with all the positive, British and European PMIs with the negative ISM, negative dollar. So you had positive everything, negative dollar, and that is basically what drove the market today. Now, you don't necessarily simply trade on that, but you want to be aware of that. So one of the examples I use all the time is, you can have this perfect little checkup, but you still have to, look both ways before you cross the street. Meaning your indicators can give you every buy, sell, signal, etc. along the way, but that doesn't mean that I'm not going to use caution whenever I'm trading. And so if I'm trading FX pairs and I'm trading the US yen and my system for some reason gives me a, buy signal, well, I'm like, wait a minute, the dollar's supposed to be weak, the yen's supposed to be strong. I think I'm going to go ahead and avoid this trade, and that's something that you can implement into your own trading. Now, you may have a seasonally based system, a statistically based system that works very well for you, and that's okay. So I'm just letting you know this is, one way to use fundamentals is to filter out more for intraday, trading than statistical seasonal based systems. But for technical trading, just for pure technical trading, it's very, very helpful to have the fundamentals sort of in your favor. So one of the things I've talked to some people, other traders this morning about was defining trend. And trend is not just a moving average on a chart. Okay, it's not just the direction of the price. It's not just your combination of indicators. So trend is also the reasons behind certain things. Now, your long-term trend, okay, is defined by your past fundamentals. Now, you're still going to trade the chart, okay, but it gives the reason behind it. It's like, hey, there's continuing weakening data. That's a negative trend. And I'm not purely talking about chart here so much. I'm talking about even pure, application of trading. But it's having that, okay, there is a, definitely a fundamental negativity on the dollar right now, that type thing. And, or vice versa, however you want to put that, on whatever market. But you have that long term, which is really fundamentally driven. And then you're going to have your, short term, your very short term, okay, which is also going to be, in a sense, fundamentally driven by the releases that are coming out, like, right now. So what came out now? How do I use that? And, what can I do to make money off of it? The medium term, okay, that's going to be really your technicals. So you want to be aware of that longer term. You want to be aware of that shorter term, but you want to make your decisions based on the medium term. Anyways, stay there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And one thing I want to go over today, one of the subscribers just asked a couple questions about, how do butterflies work on Nadex? Like, how do you actually do them? And so I thought I would do a quick lesson on just butterflies. I've been doing a lot of end-of-day premium collection. We may still do that. It's one of my favorite strategies to do on the Nadex platform, and it's very, very easy to do with the scanner. But I just want to make sure that you know actually how to, how these work. And if you don't have one yet, let's see here if I can get this posted up here so I can show you. 1 second. And I'll put it in the Tiger's Den. So right there on Tiger TV. Of course, as you should know by now, you can always watch the shows every day right there on Tiger TV or inside the den. And I've logged in here. By the way, make sure you go to TFNN.com and do two things. One is click on Nadex. Okay? And get your account set up, create your account, log in. Once you've done that, and it takes about 15 seconds, by the way, to set up a demo account. So if you don't know how to do that, then just click under Our Products on Nadex, and I'll show you that real quick. So over here, under Nadex, click on Our Products, and then click on Demo Account. And fill that form in. Like I said, it takes 15 seconds. To get a live account going, click on Create Account. Quick start, go from start to funded. It only takes $100 to fund an account. There's no day trading restrictions like stock. You can't be assigned a futures contract or asked to, make delivery on a physical commodity. And there's no assignments of calls, calls and puts like, stock being called away from your put to you. So you don't have to worry about any of that. Everything is cash settled instantly on the day of expiration. Within about a minute or so of expiration, the money is immediately deposited back into your account. Any remaining risk capital plus any potential profit will be deposited back into your account, and so it's available for trading again, and that can happen multiple times in a single day. But anyway, so one of the tools that we've come out with and I've released recently is this binary scanner. And on binaries, the way they work, the quick summary of a binary is that you go in, and every binary is worth $100. Okay, maximum value of $100, no matter what. Now, you could buy 100 of them, 1,000 of them, or one of them, but they're all worth $100, okay? And once you understand that, that's half the battle, because it makes it a lot simpler. And if you buy a binary, you're saying this statement is true. So let me show you these statements real quick. We'll come over here, we'll look at this on, say, Aussie. Okay, and let's just say we're looking at the Aussie dollar right now for 3 o'clock expiration. And so if I buy this 97.80, I'm saying that, and by the way, this is the most, rudimentary definition of binaries. This is more how, this is like the basic binaries. The cool thing is Nadex actually has tradable binaries, not just betting binaries. But let me give you the basic definition first. It makes it all make a little more sense as we progress through. So when I buy a binary, I'm saying the statement itself is true. So what is the statement? Well, the Aussie dollar will be greater than 0.9780 at 3 p.m. Okay? Pretty simple. That's it. And if I buy it, and if I held it all the way till 3 o'clock, and it was there at 3 o'clock, then I'd be correct, and I'd be profitable on the trade. If not, if it was equal to or less than, because that wouldn't be greater than, then the trade would lose. Now, on the inverse, I could sell the binary, which is saying I say that that statement is false, meaning the market will be less than or equal to. So if I sell that binary, and the Aussie dollar is less than or equal to 97.80 at 3 p.m., then I'll be profitable because I was correct in my statement of saying it's false. Or I was correct by selling. Or I was correct in my statement of saying it's true by buying, depending upon whether it's basically above or below or equal to the binary. So again, buy means true, and in this case the statement is Aussie dollar greater than 97.80. Sell means false, which in this case would mean the Aussie dollar is less than or equal to 97.80. And that's really all you have to worry about. Okay? I mean, that's the most basic. Once you get that, it gets a lot easier. Okay? So you know that the maximum value is $100. You know the true and false statement. We come back, we'll talk about how does the profit and loss work, and then we're going to jump, okay, right into, well, what is a butterfly, and how would I put two of these things together to do a range-bound trade. Stay right back. Stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And let's see what all we got going on. Okay, so when we departed from the last break there, we're talking about how you can buy or sell a binary. If you buy a binary, you're saying the statement is true. If you sell a binary, you're saying the statement is false at expiration. Now, one thing that's important to understand is you can close it before expiration, okay? And, you know, so as it moves, if you buy it at 10, you could sell it at 20. You don't have to buy it at 10 and hold it all the way till it gets to 100. You don't have to hold it all the way till expiration. That's probably one of the biggest mistakes traders make, and especially when trading out of the money binaries. Okay, so now we got a new term. What does out of the money mean? Okay, well, think about it. To be correct on your statement, okay, you have to have an in-the-money binary at expiration, which means your statement has to be correct at expiration. So if I buy the Aussie dollar greater than 97.80 at 3 o'clock, for that to be correct, it has to be in the money, which means Aussie dollar just simply has to be greater than 97.80. So if the Aussie dollar currently is not greater than 97.80, and I buy it, it's out of the money because the statement is currently not true. I'm just saying it's going to become true. So it's out of the money right now because it's not a correct statement. It's not greater than 97.80. But if it if the Aussie dollar goes above 97.80, then that statement will become true. It'll become in the money. And if it expires in the money, if it expires as a true statement when I bought it, then I will be profitable. Now, the flip side on the sell. Currently, the 97.80, if I sell, remember I'm saying will be less than, Aussie dollar will be less than or equal to 97.80 at 3 o'clock. Well, currently, the Aussie dollar is less than or equal to 97.80. So the false statement, the sell statement, is correct. Okay? Therefore, right now, if I'm selling that binary, on the sell side, it's in the money. By the way, it's always in the money or out of the money. There's no tie. Okay, that's why greater than is buy, less than or equal to is sell. So it's in the money on the sell side, it's out of the money on the buy side. If it's still in the money on the sell side and I sell it now and it stays in the money until expiration, I'll be profitable. If it goes above it and it becomes out of the money on the sell side, which means it becomes in the money on the buy side, then I would lose on selling the trade. All right? So I know that's a big jump right there. I have a whole video on in the money, out of the money, at the money. All right, so let's keep going. Now let's look at, this series. Okay, so what about profit and loss? On the buy side, your offer, your buy price is your risk. Okay? So again, on the buy side, the offer is your risk. So if I'm risking $29, then if I held to expiration, again, I don't recommend that you buy an out-of-the-money binary and hold it to expiration. But if you did, okay, you'd make $100 minus your risk, $29. So on the buy side, the offer is the risk. And if you get that down, that helps quite a bit because it sort of simplifies where's the price coming from, what does it mean, how do I know what my risk reward is, all those pieces that you have to put together as you're doing this. All right, so we got that piece, that step down. And then what about the sell side? Well, it's inverted. So my sell price is my profit potential, my maximum profit potential on the trade. So if the sell price is $24, the most I could make would be $24, and I'd be risking how much? So 24, right, minus 100 would be $76. So my max risk would be 76. If the sell price was 24, that's my max profit. Now, all this sort of sounds complicated and doing all this math. Right, exactly, especially when you have like 100 of these contracts at one time. So that's why I have the binary scanner. For my own sanity, as well as the sanity of other traders. I mean, these are all the binaries currently available on Nadex for just the Aussie dollar. I mean, imagine going through and trying to do all that math in your head. It's not hard. I mean, you're talking about subtracting from 100. I mean, anybody can do it. So I mean, it's elementary math. It's learning how to, add up to $1 from pennies. But, again, not hard to do, but a lot to do. So I can go over here and I can really narrow down all these choices. So what we're going to do right now is we're going to narrow them down to what I call a butterfly trade, a binary butterfly. And that's where I expect the market to be range bound, so to stay inside of a range. I probably wouldn't go after Aussie dollar today. It's been a little nuts. We may look at a couple other markets. We'll figure out which ones here in a second as we're progressing. But, one thing I want to make sure that you do have right there is, we're looking for a range bound, which means I want both my binaries to be in the money, okay, when I get in, with the expectation they will stay there all the way until expiration. Okay, meaning if I buy at 97.60, then that means that the Aussie dollar is currently greater than 97.60, and I expect it to stay greater than 97.60 until 3 o'clock. If I sell the 97.80, then the market is currently lower than or equal to 97.80, and I expect it to stay lower than or equal to 97.80 until 3 o'clock. That's a butterfly, okay? It's range bounded. It's also sort of like an iron condor. If you put it on a risk graph, iron condor, iron butterfly are going to look very, very similar. There are some little details depending on how you pick the strikes and everything that makes it all come together. But, you can call this an iron condor if it makes you feel better. It's a range bound strategy, end of the day. So what's my risk? Well, my risk on this one's $75. My risk on this one is basically $75. Okay. So, wow, I'm risking $150? Well, no, because can it expire greater than 97.80 and below 97.60 at the exact same time? Can it both be above 97.80 and below 97.60 at 3 p.m. Eastern Time? No, Aussie dollar cannot be greater than 97.80 and below 97.60 at the same time. It could be greater than both of them. It could be lower than both of them. It could be in between them. But it could not be greater and lower than both contracts. It couldn't be at 97.90 and 97.50 at once at 3 o'clock. So by doing this trade, I'm saying it'll stay in between the range, which means only one side could lose. Both sides can't lose unless you like close out on one losing side and then let it go to the other side and close out on that losing side. So you could cause the loss. But if you leave the thing alone, only one side could potentially lose. So if I'm going to lose $75 on one side and make $25 on the other, that means I can't lose more than $50 total. If I could lose $75 on the other side, but I'd make $25 from the other one, I could, at most lose $50 total. Now, what happens if it stays between and I make $25 on both sides? I'm making $50 total. So now I have a 1-to-1 risk-reward premium collection style trade that I can take advantage of. Okay? And, that's something that you'll definitely, probably want to make sure that you are taking advantage of, because this is a very cool strategy. And it does take a little work, but, it's not that hard to do. It's just, it's just new to get used to. But how do you find these binaries? Okay, so how are you going to find these butterfly potential trades that are all, sitting out there that you could, take advantage of on your trades? And the way I do it is I use the scanner. So I go over here to the Diagnostic Tool Scanner, and I enter right here, risk of 70. And I enter right here, risk of 90. And that immediately is basically going to put me in that whole, $20, $25 range for the trades and help me find those. And then I'm going to go over and I'm going to bump this down, to whatever, like, am I looking for a weekly butterfly? Because you can do these on a weekly basis. Let's say you only want to do weeklies. You may say, only give me ones that are greater than a day till expiration. If I did that, then all I'm going to see are the weekly potential butterflies. Like they're weeklies right there on the S&P 500. You could do a range-bound 1643 to 1607 on the S&P. Making $25 on both sides, risking $75 as well on each side, which means risking 50 to make a net 50 potential. So there's the S&P 500 one. What about the NASDAQ? Well, I can scroll down here. I can look. Well, there's a 25. There's a 25. So I could use those two right there. I could do 29.90 to 29.30 on NASDAQ. I could hop over on the Wall Street 30. I could do 15.25 to 50.25. Or 15.325 to 50.25. Let's see here. Nothing on the FTSE. I can go over to the small cap. I got a 991 to 967. I can go into the DAX, and I can look right here. I can see a 84.25 to a 81.75 range. So pretty big range right there. And I mean, these are across the board. Natural gas, got some right there. Crude oil. You could do a 91.75 to 94.75 range bound on crude. For gold, I could go in for 1434.50. Be a little tough right there because I know it's been bumping that 1440 level right crazy to 1394.50. On silver, I could do 23.25 to 22.25, so that's pretty huge. On copper, go in 3.375 to 3.275. So like, see, there's these all the way down. Corn 664.95 to 649.50. And so you can look at Fibonacci levels, you can look at support and resistance levels, you can look at deviations, you can look at whatever you want to. Pardon me. But you can basically find these range-bound trades. Now, these are just weeklies. Do you have to do them on a weekly basis? No. Some people, though, just due to your schedule, you might need to do it on a weekly basis, right? So just, like I said, depending upon what your schedule is. Now, you may go, you know what? I don't want weeklies. I want to make money today, and I want to be done and out. I want to make money in the next, hour. And so you may bring this thing down to 30 minutes and see what you can find. See if there's anything that looks halfway decent across the charts that you're like, you know what, I can do that trade. I like that range-bound trade. Now, what I will tell you is the more time you have, a lot of times a little bit better it can be, right? Because it'll be wider apart. When you're doing range-bound with 15 minutes to go till expiration, I mean, you're really just hoping it'll stay in that range. And that can be a little tough. Doesn't mean you can't do it. Doesn't mean it won't work. But you want to definitely pick range-bound time frames, okay? There are certain times of the day where the market reverses. There are certain times where it develops trends. There's certain times where it continues its trends. And there's certain times where it's range-bound. And so you definitely want to focus on the range-bound time frame if you're doing this intraday. It just makes sense that you wouldn't want to be doing this, at other times of the day. So what times might that be? And, one time could be just a ranged market, obviously pretty much FX till about 7 or 8 o'clock. Well, there are 7 o'clock expiration binaries. Other times that you may have range-bound markets, 2 to 3:15 can usually be either the market's going to do a pop reversal like by about 30 pips or so, or it'll be range-bound, so there are 3 a.m. expirations. All right. What other times? Well, you got 7 to 8:15. There's not really anything for you there on the binaries during that time. A lot of times that's a breakout, or maybe a reversal. It's not the best range-bound time. But really, your best range-bound times are going to be, the afternoon, like 12:30 to 5. You're either going to get like massive continuation of trend, or you're going to go range-bound. After that time, you're going to be ranged. So if you've been ranged, after like 12 o'clock, and you're ranged like 1 o'clock, 2 o'clock, 3 o'clock, I'm really going to be looking at 7 o'clock expirations, okay? Because this thing's been in a range this entire time. There's no news coming out on this currency pair. There's no other major news coming out on other currency pairs before 7 o'clock. Therefore, I see no reason why this thing wouldn't continue to stay within the range for the next, hour, 2 hour, 3 hours. So you can look at, has it been range bound since, 1, 2, 3 o'clock? Well, that's a great indication it may continue to do so, at least for the next few hours since nothing else is happening. But, tying all these different pieces together can really, help quite a bit. And let's see here. The next step is, so once you narrow down your time frame, we could go in and, let's see, that US 500 one, by the way, it's already taken basically profit, like it disappeared off the screen because it's worth so little now. What about US Tech? Let's see if we can pull up US Tech. And maybe we'll just throw, at least try to throw one of these on if it stays up there. All right, so we got S&Ps at 1626. So how would you place this trade? So I'd go in here at 1627.3. I'd sell it. I'd go in here on the 1625.3, and I'd buy it. And I like to bring up both tickets at the same time, especially if there's one leg that sort of seems to be fluctuating a lot, so I can go for that price. Like this one's fluctuating like 14.19, 14.19. So I'm going to go in here, I'm going to put this thing at 19, and I'm going to say place order. And then over here, this one's, fluctuating a little bit. And it's right around 84 or so. So I'll go ahead, I'll just take that one. I'll buy it. Oh, see, it's moving. It's moving fast on me. So right now I'm short. Not a big deal, but I'm short on the trade. Now, if I get the other side on, to me, there's no reason to buy the thing for $90. I only get $10. Now, I will actually go for 15, okay, over and over again. But I'll go ahead and I'm going to put this order in right here at just 85. And we might get a little pop on the market, get us filled on that. And we'll watch it. And we'll be back here in just a minute.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome on back here to the Diagnostic Trading Hour. And so now we're looking at butterflies, and we got one butterfly on, but the thing moved really fast on us. And remember, what I said was I'm bigger on these on a longer time frame. Now, the premium collection, like expiration premium collections, I love doing, but I do them directionally. The butterflies are very non-directional. And if you'll remember, what is the time of day that I said to do it? So there's certain times that you want to look for the range breakout, or the range bound times, right? So we're in that time frame. We could be easily range bound right now. The market could fall. It could go in our favor, but we'll see. So we went in and we actually sold a 1627.3, and we bought a 1625.3. So 1625.3, obviously very profitable right now. 1627.3, not near as profitable at the moment. And you'll actually see here in the last couple minutes before expiration how they'll all pop up. And you'll see like no possible volatility left in them. And what I mean, like the liquidity will dry up in the last 2 minutes. And that'll really freak people out when they're trading these, because they go in and they place these trades with the idea that, you know, they'll be able to get it in the last 2 minutes, but then also liquidity's gone and they think they're losing when really they're winning. It's just there's no orders in the market, and those are just random people trying to, you know, get out of their trades. Now, what are some other trades you could do with this? What are some things you could do? One, well, let's say you see all of a sudden the market's going up. You could hedge it if you wanted to. You could literally layer these back and forth. Like during the break I went in, I looked at the Wall Street 15-158s as well as a potential hedging trade for going long on this. And so by buying that, if the Dow stays above 15-158 by 2 o'clock, then I'm profitable on that trade. Okay? So that's one thing you can do. Another thing, and this is a really cool strategy on here. See, I got the Dow trades on there, right there. So where I went in, I actually piled in on those because I like to do these directionally. But so those are up like a couple $100. And now they can go down, they can go up. I mean, these things are incredibly volatile. Watch that. They went from 270 to like +4, like $270 to $4. I mean, that's how much they move. Okay. And so you just want to be really aware of that. And, I mean, they can go against you just as fast as they can go for you. Okay? So it's really good to have ideas like take profits in, depending upon what kind of fill price you're getting. So I might want to go in here, and I could actually choose if I wanted to. And I do recommend that you check out this type of strategy where I go and I say, you know what, get me out if it gets to, say, 96. Because, I mean, that's basically max profit minus a few bucks. The $4 is not worth the potential loss. And so that's one way you can do it. Another way, and this is actually a really cool phenomenon, we can see it if we had a little more time. I'll try to bring that up maybe tomorrow, is it's really interesting on the binaries, because when you do the butterflies, if you buy one for, you know, 25 or 75 bucks, and you sell one for 25 bucks, one thing that you definitely know is the market will basically be at 50 if the underlying market gets to that price. Okay? So when it gets to that price, you can go in and you can choose to get out at 50. So you could have bought it at 50, or you could have bought it at 75 and get out of it at 50. So it means you lose 25 bucks. But guess what? The one that you sold for $25, meaning you only can make 25 on it, it's probably up about 15 to 20. So meaning you're only down like $5 or $10 on the trade on your range-bound trade. All right? So by putting these pieces together, there's a lot more I can say on butterflies. I mean, we could do like a 4-hour workshop on them. But they're fun to play with. But those are the key components. Go into that 70 to 90, and then start looking at expiration times. Be aware of range-bound times versus not, have an exit plan. All right. You all have a great day, and I will see you tomorrow. We'll have another great show coming up for you. David White next on Power Trading Hour.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.